ETFs or exchange-traded funds are a type of investment fund that can be bought and sold on stocks exchanges, just like individual stocks. They represent a basket of various securities such as stocks, bonds, or commodities and offer investors diversification at a relatively low cost.
In this video, we'll explain what the DSP Nifty Top 10 Equal Weight ETF is, whether now is the right time to buy it, and provide a detailed analysis to help you make an informed investment decision.
Market capitalization refers to the total value of a company in the stock market. It is calculated using the following formula. Market cap equals total number of shares multiplied by price per share. Example, if a company has 10 crore or 100 million shares and each share is priced at rupees 100, then market cap equals 10 crore multiplied by rupees 100, which is rupees 1000 crore. The larger the company, the higher its market capitalization. That's why companies like Reliance, TCS and HDFC have a very high market cap.
When an index, like Nifty 50 is created, each company included in it is given a certain level of importance, which is called weightage. In an index based on market capitalization, large companies get higher weightage, more influence, smaller companies get lower weightage, less influence. Meaning, if Reliance has a very large market cap, it will have the biggest impact on the movement of the Nifty 50 index. On the other hand, a smaller company will have a limited effect on the index.
In the DSP Nifty Top 10 Equal Weight ETF, each company is given equal weightage, 10%, regardless of whether its market cap is large or small. The benefit of this approach is that no single company can dominate or control the index, because the movement of the index depends on the weightage assigned to each company.
What is DSP Nifty Top 10 Equal Weight ETF? DSP Nifty Top 10 Equal Weight ETF is an exchange-traded fund that aims to replicate the performance of the Nifty Top 10 Equal Weight Index. The fund tries to deliver returns similar to the index, though there may be slight tracking errors. Let's also understand the Nifty Top 10 Equal Weight Index, which is tracked by the DSP Nifty Top 10 Equal Weight ETF. Top 10 companies in Nifty 50 by weightage as on latest update. This index reviews the list of companies every 6 months and rebalances the weights every 3 months to ensure that each company's weight remains close to 10%. Let's take a quick glance at the key facts about DSP Equal Weight Fund ETF. Total AUM 759 crore rupees. The fund has crossed 759 crore rupees AUM in just 10 months, showing strong investor trust. Fund age 10 months, a newly launched fund, 5th September 2024, yet showing promising early performance. Expense ratio 0.15%, ultra-low expense ratio of just 0.15%, meaning minimal cuts from your returns. Exit load, none. No exit load, withdraw your money anytime without any extra charges. Investment goal, capital growth and income, designed for long-term capital appreciation with added income over time. Ideal holding period 10 years plus. This fund suits long-term investors, best held for 10 years or more. Portfolio allocation, equity 99.5%, debt 0.5%. Primarily an equity fund, high return potential with higher risk. Indian allocation 99.55% in Indian stocks, almost entirely invested in Indian equities, participate in India's growth story. Market cap focus 100% large cap. Focused only on large cap companies, offering more stability and lower volatility.
How do we find such ETFs? Go to the NSE website. Download the entire ETF list in Excel format. There are usually 264 to 267 ETFs listed. From that list, filter out only equity ETFs. Among those, look for high volume ETFs. For example, underline or highlight just one from each category for easy tracking. Now you will have a refined list of around 57 to 66 equity ETFs. For each of these, compare the CMP with the 52-week low. Calculate the percentage difference. If the difference is under 10%, then that ETF may be considered close to the bottom and worth analyzing for potential buying.
We are tracking the Nifty Top 10 Equal Weight Index, and here's what we found. Current market price is 96 rupees. The 52-week low was rupees 86.50. Price difference is 9 rupees 50 paise. Percentage above 52-week low is only 10.98%. That means the index is very close to the buy zone, not too high, not too far. So what should a smart investor do? If you want safety, wait for a dip near rupees 90 to 91. If you believe in long-term growth, start buying in small quantities or SIP style. Because, remember, buying smart is better than buying fast.
Even the truth needs proof. So does every investment. Don't invest on emotions, invest on research.